I have the most extraordinary partner in. They keep saying inflation is fixed at 3%. They keep saying Trump's tax cuts are putting extra cash in your pocket. But when I did the math, I found something very different. Because this madman strategy might feel good right now, but economists are quietly warning that 2026 could be the year the bill shows up. Let's start with a day people may study for a long, long time. April 2nd, 2025. Trump called it Liberation Day. And then things blew up. In just 48 hours, about $5 trillion in stock market value disappeared. The S&P 500 fell 10%. It was one of the worst two-day drops since COVID. And this time, it wasn't a virus. It was something America did to itself. Now here's the part that confuses people. Because today, in January 2026, the stock market looks fine again. Unemployment is still around 4%. Gas is under $3 in many places. And Trump is saying, see, best economy ever. But I've studied economic crashes for 10 years. From big supply problems, to market panics, to major recessions. And I'm telling you, what we're watching right now is not a normal plan. It's like giving the economy a huge candy rush. It feels amazing at first. Then you crash. I call this the sugar coma economy. Hear what that means. When you eat a lot of sugar, you feel super energetic. You feel like you can do anything. But if you don't eat real food after that, like protein and healthy stuff, your body crashes hard. That's what's happening to the US economy right now. The sugar is tax cuts, less rules on businesses, big government spending, and pushing the Fed to keep money cheap. The rush is stocks going up, low unemployment, cheaper gas, and bigger refunds. The crash could be higher inflation, bigger trade wars, and a government debt problem so big it takes decades to fix. And listen, I'm not here to say everything is bad. That would be unfair. Some things really do feel better right now. But every good thing has a cost. It's just being delayed. And eventually, someone has to pay. Now let's talk about the big promise Trump made. He said inflation would basically disappear. Hear what actually happened. When Trump took office in January 2025, inflation was around 3%. It was way lower than the 2022 peak, but still above the Fed's goal of 2%. By the end of 2025, inflation was still around 2.7% to 3%. So people say, see, it worked. But economists warn it might not stay that way. Some estimates say inflation could jump to 6% to 9% by late 2026 if the full plan keeps going. That is huge. So why would inflation go back up? There are three big reasons. Reason 1, tariffs, which are basically taxes. A tariff is a tax on imported stuff, things the US buys from other countries. And no matter what politicians say, Americans usually end up paying it because companies raise prices. Trump announced big tariffs on many imports. Some products from China got tariffs extremely high. That means regular people pay more for electronics, clothes, appliances, furniture, basically everyday stuff. Some estimates say this could cost families around $1,200 extra, and later even more. That's not free money. That's a bill. Reason 2, worker shortages. Trump's deportation push removed lots of workers from jobs like farms, construction, food factories. When there are fewer workers, businesses have to pay higher wages to hire people. Higher wages can be good for workers, but it also makes products cost more. So prices can rise again. Reason 3. Messing with the Federal Reserve. Trump has publicly attacked the Fed and demanded lower interest rates. But markets don't like that. Because if people think the Fed is controlled by politicians, they trust it less. And when trust drops, inflation can get worse fast. Now, let's talk about the big new law Trump signed. The One Big Beautiful Bill Act. Yes, that's really the name. Here's the sweet part. He made older tax cuts permanent. He added new tax breaks like no federal tax on tips up to a limit, no tax on some overtime up to a limit, and less tax on Social Security for many retirees. Sounds great, right? But here's the bitter part. A lot of it is not paid for. That means the government borrows more money. Different budget groups estimate it could add trillions to the national debt over the next 10 years. And debt is like a credit card. If you keep swiping the card, you can live great today. But later, the payments get painful. And when those payments get too big, the government has only a few choices. Cut programs like Social Security or Medicare, or raise taxes later, or borrow even more. Either way, someone pays. Now here's the wild part. Trump isn't just doing economics. He's using something like a threat strategy. There's an old idea called the Madman theory. It means act so unpredictable that other countries and companies get scared and give you what you want. And yes, sometimes this can work. After tariff threats, some companies announced big investments in U.S. factories because they didn't want to get hit by tariffs. So you could say the strategy worked in that way. But there's a big problem. This strategy only works if people truly believe you won't back down. And Trump has gone back and forth, tariffs on, tariffs paused, then on again, then temporary deals. That tells the world, if we wait long enough, he might blink. And once the world learns that, the threat loses power. Now let's talk about what people miss. Because yes, the market recovered after that big crash. But the damage didn't disappear. Other countries hit back with their own tariffs. Some American exports dropped hard, especially farming exports. And companies got stuck choosing between eating the cost, raising prices on customers, or spending tons of money to move factories. And moving factories isn't fast. It takes years. Also, while unemployment stayed low, job growth slowed down a lot. So it's not a perfect picture. It's more like a strong-looking house, with cracks in the foundation. Now here's what it means for regular people. The good news, gas is cheaper. Some families see bigger refunds. Mortgage rates came down a bit. Retirement accounts recovered if you stayed invested. The bad news, imported items cost more. Food prices can swing around. Some social programs got tighter or cut. Health costs can rise. And the biggest problem is uncertainty. Nobody knows what the rules will be next month. So here's the real question. Is this real growth? Or just a sugar rush? Because right now, January 2026, it looks okay on the surface. But under the surface, debt is rising fast. Trade relationships are getting worse. Inflation pressure is building quietly. And by mid-2026, the hidden costs could finally hit people directly. Because companies can't absorb extra costs forever. Stores can't rely on old inventory forever. Eventually, the higher prices show up. Not because someone is evil. Because math doesn't care about politics. So is this genius or disaster? It depends on one thing. Does the world blink first? Or does America blink first? History shows something important. Countries that start trade wars often think they will win quickly. They usually don't. Now let me make this personal. I've talked to people in their 60s and 70s. People who worked their whole life, saved money, planned carefully, and now they're watching the news thinking, are the rules about to change on me? Hear what I tell them. You're not wrong to be worried, but you also don't have to panic. Your retirement might look fine right now because markets recovered. But that recovery is based on two short-term things: people hopping tariffs calm down, and companies holding back price increases. Those shields don't last forever. By mid-2026, those shields can disappear. And then the real cost shows up in stores, in bills, in everyday life. So what can you do? First, don't panic. Panic never helps. Second, don't bet everything on one outcome. Third, stay informed using real data, not shouting TV arguments. Because the bill is coming. The only question is, do we pay it now? Or do we hand it to our kids and grandkids later? If you want more simple, honest breakdowns like this, subscribe. And tell me in the comments, is this sustainable growth? Or a sugar rush that ends in a crash? And what topic should I explain next?